So today I'm very happy to have a very established panel for the blockchain discussion here. So here with us, we have Jake and Jonathan, both a very successful entrepreneur running his own blockchain project, one in the payment industry, the other one in financial content sharing economy, right? So at the same time, we have Anson. Anson is the chairman of Association of Blockchain and Cryptocurrency. I think you probably can give a very good 101 on blockchain as well. And then also we have Shui, right? This is everybody's like, I heard that Singapore college students look at you as idol in terms of entrepreneurs, right? So Carousell beats Lazada. Alibaba backed e-commerce platform is the #1 most popular e-commerce platform in Singapore. So I have Suri with us today. And then we also have my good friend, Zhuang. Zhuang is a very established crypto investor, is the managing partner of X Square Capital. Jake, I already introduced, yeah. Thanks for reminding. Okay, so first question, right? So all this like, boom and buzz about blockchain. So what exactly is blockchain? Can you give us your 2 cents?
Sure. So blockchain is basically a database, but distributed. So when the rise of internet happened, every digital internet companies today have database, right? So database are backend used to store information. And then in the financial space, it basically stores your client info with the bank account and how much you have in USD, how much in Sing dollars for like maybe Carousell, all the different product SKUs. Yeah. So every company has a database. But the rise of blockchain says that, hey, with this concentration of information, it's making a lot of companies monopolize. And then there's a need to bring this in a distributed manner, such that let the society decide, right? Social governance kick in instead of letting a single company dictate how all these companies should be run. Because the more information you have, the more power you have to dictate many things, such as transaction fee, the speed, and like various problems. I think that's basically blockchain.
I think I'll add on to what Jake has to say, because the lady in blue there looks very puzzled. Yeah. I think to make it simpler, right, for most people, and for what X Square does in Singapore and Southeast Asia, we give a lot of talks, and a lot of people will ask us, generally, what is the blockchain? The blockchain is like the handphone in the 90s. In the 90s, there is Nokia, there is Ericsson, there is so many different phone companies, right? And sometimes, this gets, what the phone company does, the kind of features that it has, it kind of, dilutes itself along the way. Along the way, 2007 came. When 2007 came, the shakeup happened, the iPhone came along, Android came along, and that's where we have, what we call, the main dominant design today in a sense. So if you look at what Atlas is actually trying to do, Atlas is a protocol. They are looking for people to kind of build on top of that in a sense. So in terms of the blockchain, if you think about it with your shortcuts and hubris like it's the handphone, we are back in the stage of the early 90s where there are, entrepreneurs like Zeall, like Atlas trying to basically disrupt, their kind of industry with the kind of infrastructure and protocol that they and more people can build on to build their community.
Wow. I can either give a 10-hour talk or 1-minute talk on this. So basically, blockchain came about because a lot of events that happened along the way. For example, the financial crisis that led to the creation of Bitcoin, which was the first application of how to use blockchain. And then after that, we realized the technology behind is so powerful that allows Bitcoin to become using as a payment, store of value, and so on, that we realized it's the technology behind that can power other things as well. So then we have a new one called, back then a new one called Ethereum, which now we can also add business logic to it. So what the speakers were saying, blockchain is basically 3 main things. One is an incentivization method. So for example, Atlas doing a token, you can add program apps on top of it, which is the business logic part. And also, it's a database as well to store things. But most important is that no one can actually delete it. So most of the problems we see, even in banks, in every place we see, hacking actually happens. So most of the exchanges that we see in the cryptocurrency space, it's not a matter of when they will get hacked, it's after they get hacked what they need to do. So by decentralizing the ecosystem, will actually prevent all these things from happening. But it's definitely taking time.
Anyone wants to add to that?
Yeah, I'll just add another perspective. So I think we've already covered the technical aspects, a lot of the business applications. For me, what I feel about blockchain is that it brings certainty to a world that's very uncertain. And up until today, you had to trust people. You had to trust in intermediaries. You had to even trust any sort of counterparty in which you are transacting with. Okay, so you're receiving something for some other product or service, and you're hoping that they're going to stick to their word. You're going to hope that what they're giving you is what they originally had agreed to, and vice versa. You know, the other party is also hoping that that happens. And the world has been constructed in a way to try to bring more certainty to that highly uncertain process. And that's brought about these industries such as lawyers, accountants, consultants, intermediaries, trade and settlement when it comes to finance, all because you don't necessarily have 100% certainty about information, about transactions as a type of information. And blockchain is that single record that you can rely upon. Given that it is decentralized and distributed enough, it's a very big given, you can trust it. And you can have the certainty that the information that's being stored is true, is accurate, and you don't have to second guess it. So for me, that's the feeling that I get from blockchain.
I think I can also add in here. So I think this question I also ask myself all the time, what is blockchain? And 6 months ago, literally that was the question that I was like scratching my head. I was going to my buddy, Jake, and it's like, please give me a crash course, because everyone's coming up to us, is Carousell going to do this blockchain thing or not? Are you going to do an ICO? And that got me intrigued. And I think for me, what's really exciting about blockchain is the power of decentralization and having the token economics that helps different participants actually share in the creation of this interesting economy or ecosystem, right? So in certain cases, you have developers, you have content contributors, you have algorithm developers in a certain ecosystem, and everyone actually has value that they're actually growing together in such an economy. So I think for us at Carousell, it's really interesting for us to be understanding this dynamic of blockchain and how it's evolving, especially our relevance in a decentralized future. And the second part of why we are so excited about blockchain is at Carousell, we're really spending a lot more time on AI and machine learning. And what really powers AI and machine learning, effectiveness of that, is really data. And if you combine what I mentioned earlier about just the token economics that actually incentivizes all the different players in the ecosystem to come together and contribute to the chain, what you get is a very strong data network effect, which then fuels even better machine learning algorithms, which helps us make selling even simpler. You take a photo, and you can list it in 3 seconds, you improve trust. Many applications that blockchain with a data network effect could just supercharge our AI and machine learning applications.
Great. And the second question is, how can blockchain be used? What's the application case of that?
One of the main things definitely is insurance, especially regarding the travel industry. Because once you, for example, you go overseas, there's something happened to you, maybe there's an earthquake. Usually when you start claiming insurance, it's a whole load of paperwork, especially when it's cross borders, because you can't really prove if the paperwork that you have is actually real or not, because it's overseas, unless you go to the Ministry of Foreign Affairs to have it stamped and so on. But even that, we don't know if it's real. So if you have a single database, transaction records that can be proven by different parties and everyone trusts and recognizes that, then it makes the process much faster. So another good use case would be, for example, your credit history, your credit reputation when getting a credit card. So today I can go to Singapore, show my income statement, get a credit card here. I can use the same statement to go overseas to also get another credit card. This is not good for consumers, but good for banks. If there is a central ledger that they can use, then people will know where you got the credit cards and can help prevent can help prevent the defaults on the cards as well, because you have a central, not central, a decentralized database that everyone can share and use. So basically, things that you don't have trust for before, now with a decentralized database, you can actually trust it when everyone is using it.
Okay. Another question to Jake and Jonathan. So you guys are turning to blockchain to be the foundation for your new business. So what leads to that decision, and what is the benefit out of it? And also, just to add to that, there are many people very skeptical of blockchain, and it seems that there are really many terrible projects. So how do you differentiate a good project from a bad one? This can also extend to other guest speaker here.
Right, so I founded a company called Red, which has two products. One is called RedX, which is a payment extension. Extension means you download it on the browser. There's an app called RedS. It's a mobile app that basically tells you what are the cheapest thing around the world in real time. So one example is maybe you want to get a Samsung phone. You fire out the app. You know that in Japan is the cheapest at real time. That's what we did. When I did a payment company, I was relying on banks. And then when we hit our Series A, closed it, we realized that it's not going to scale. Why? Firstly, my margin I earn is 0.06% per transaction. Yeah, the bank is eating a lot. Second is settlements, because I do cross-border payments, right? It takes the weekends, they don't work. These people, you call them on the weekend, they're like, I'm sorry, bro, I'm resting, man. What are you calling me for? Then how is a payment company going to do a successful, in real time without using this kind of a central authority like the banks? So pissed me off, then I said, okay, I'm going to do a blockchain, build my own bank to facilitate my own business. Yeah, which we eventually did. So Rate 3 focuses on two things, settlements and credit, I think as mentioned earlier. So besides my own business, Series A that was going to use my own network, we have already reached out to a few really different business use case that requires 24/7 settlements, lowest costs in every aspect because of how we built our mainnet. Yeah, in that case. So number one reason, conclusion, right? I talk too much. Number one reason is my own business suffered the same problem. Number two is I think the existing central authority, whoever is governing, is too, they are misaligned their self-interest. Yeah, so they do things to their own benefits. And third is if you look at game theory, right? Blockchain enables cooperation because if you cheat one time, you can't default, right? The prisoner's dilemma kind of situation. So just want to say a little credit, right? If you change your identity, go to a new country, if you have a central ledger, then there's no way you can get access to credit again. So in that case, you really don't want to do anything funny. Yeah. So that was the main highlight that I think.
So I run a company called Red Pulse, and we are a financial research ecosystem. And we've been operating for a couple of years actually already, even before we did a token sale. We started in 2015, more as a traditional research play. Have a couple of research analysts on board that are essentially covering markets, looking at sector trends, looking at companies, looking at major market developments, and doing so on behalf of a global clientele. And going very well, but came to a couple of realizations. Number one, that these financial institutions, they don't want to pay for generic research anymore. It's becoming highly commoditized. And so that was bad news for us. We were starting to think about, okay, what else could we be doing? How can we pivot? What types of service offerings could we do instead of this generic content? The second observation, perhaps much more optimistically, is realizing that these same institutions are willing to pay quite a lot for custom content. So custom, on-demand, bespoke content. Getting access to those industry experts that are very unique in their understanding of a particular space. And that's the special sauce. That's the unique aspect that they were seeking out because everybody else has access to the same generic content. It's no longer special. Doesn't give them an edge. But what does give them an edge is having access to those experts. And we were thinking, well, how do we do that, right? How do we scale? And of course, a big part of the ICO was the fundraising element. But the other reason why we moved towards tokenization is the scaling effect. So by having our own token economy, we're able to incentivize these outside contributors to share their insights, share their knowledge, share their analysis of capital markets, and get paid for doing so, right? And this also helped a very critical problem that we were aiming to solve, which is the chicken or the egg problem of how do I convince banks to join a network when I don't have the content yet? How do I convince content creators to join a network when I don't have paying banks yet? And so it's this chicken or the egg problem that we were constantly challenged with, and now we've solved it. We've solved it because we have our own token economy. We're able to use the tokens that we've created and minted to incentivize these content creators, thereby scaling the content side, scaling the readership side, and creating a much more robust, scaled up knowledge ecosystem. And it's from here, once we've achieved scale, much the same as many other startups out there, you can do almost anything, right? So we're creating a knowledge economy. We want to give these banks, financial institutions, asset managers, so on and so forth, the opportunity to request for on-demand research as well, and thereby creating the demand driver of our token economy. So having both sides is quite important for us.
So you guys want to answer the last part of the question? Anyone about how to differentiate a good project, blockchain project from a bad one? Or the team or whatever?
Okay,
Can you use this microphone? Sorry, because this one is echoing.
So I usually ask the moderator, do you want to candy coat this, or do you want to hear the real thing? So I'll just say the real thing. So it's big. All right. Most ICOs today, more than 90% out there, at least from what we're seeing, is treating this as a fundraising tool. And if it's what I'm seeing is if it's fundraising for a centralized system and you're not really giving your token holders the benefit to use it for other purposes, these are not good ICOs. Okay, and the problem is they only know the centralization part of it, and they actually don't understand that decentralized, why disintermediation and all the this is so important. And many of them today, if you talk to the CEOs, they have no clue about what blockchain is. So it's definitely important to ask them questions to see if they know what it is. We like the projects that I work with and advise, I have to make sure, for example, the CEOs actually understand what blockchain is, because there's a lot of people that really want to get into this space. But it can be quite detrimental if you don't understand and you have to handle your community. You would definitely need to be quite savvy when talking to them. So definitely when it's only just for fundraising, at least in my own personal opinion, those are projects that we need to be very careful of.
I think I'd add on to that. We see quite a lot of projects, especially in the last year. Every week, X Square sees anywhere between 150 to 200 projects. We definitely read through at least 60-page white paper. That's for sure. So we have 4 pillars of evaluation. 1, reputation of the team, of the project, of the industry, like what Anson has said. You know, whether the CEO or the founding team really does know what the hell is going on. 2, the token matrix, how it's structured, the incentives. 2 and 4, the community. But something that I like to touch on today is actually crypto economics, which many in this room wouldn't really try to understand that. So basically, I give you an equation. You can go back and Google C equals TH divided by M. So when we talk about crypto economics, we talk about the velocity of the token, how well it's spent, how it's being used, because in this age, value is driven by utility. So just put it simply, right? The more you use, the more incentivized, the token economy is, generally the value goes up. And as an investor, as a crypto fund, that's actually what we're looking at. We are looking at the X returns. So we actually model for these things. We model basically back to what their industry is about. So a project that we're working on is actually Spectrum Protocol. They are music copyrights on the blockchain. Quite a fair bit of Asian music copyrights have already been onboarded. They have almost 2 million by now. So basically tokenizing the digital aspect of that copyright. And for the first time in music history, a company is working directly with the labels that basically were left out, before in the 90s with BitTorrent, with Napster and all these guys. And when we model for their utility, the more digital content, the more digital copyright that is on board to the blockchain, which is immutable, cannot be hacked, cannot be changed, right? The micropayments that is designed within the protocol kind of relates and basically incentivize everybody who is part of the content creation process. It could be the label, it could be the artist. So that's something that we will look at very intimately. That's where it drives real world usage. And lastly, of course, the community. What is your adoption, go-to-market strategy? still goes back to traditional VC game, VC evaluating in that sense. If nobody is using your protocol, nobody is going to transact on your blockchain. Basically, you have zero velocity, which means that your token has no value at all.
Yeah, I think I'd like to add to that because as Carousell is a marketplace that connects buyers and sellers, and there are many use cases for many of these blockchain applications, right? Be it payments or logistics or if it's trust. And for us to actually work with a partner, and that's where we also want to evaluate whether or not this is a legit blockchain project. Are they going to be around for a long time to come, especially if we're going to spend a lot of time integrating some of these apps into our ecosystem. So, it comes back down to product and technology, right? Blockchain being such a nascent technology, like does the team actually really invest in building great product? Do they understand the technology? Can they do it at scale? That's one thing. And the second thing is realizing that all these blockchain projects, especially they do ICOs, they're still running an organization at the end of the day. So things like what was just mentioned, you need to still go to market, you still need to build an organization, and fundamentally you want a team that's around and committed to building out a great product, a great project. So for us, at least when we evaluate some of these projects that we want to work with, we look at those just fundamentals of company building, right? Like you can raise money through an ICO, but building out a product, building out an organization, those fundamental skills don't go away.
Just to add to that, and I agree with a lot of those comments there, is in my view, one of the things that drives my positive sentiment towards a certain project or a company is the degree of experience, business experience that the team has. And a good example, of course, is Atlas, given that they've already had a successful business build out in the form of Xanadu. And having that experience is invaluable because if you look at normal startups, if you look at the last couple of decades of startup activity, there's so many great ideas out there. And how many of those great ideas failed, not because of the weakness of the idea, but because of execution. There's so many of them, right? And for those groups, those companies that have that experience from a more of a conventional standpoint of managing people, creating great product, building technology, and then having that idea to boot, that engenders much more success, much more higher probability of success, in my view, than just the great idea alone.
Great. We'll wrap up this this panel, but we do have time for probably 2 questions from the audience. If you have any questions